to you from Korea Blockchain Week in Seoul. I'm Jen Sanasi.
And I am Sam Yu. And Jen, we are at the heart of Seoul in Korea Blockchain Week. This is an amazing time to be here. I'm just pumped that CoinDesk first ever live broadcast from KBW. How you doing?
I mean, I'm doing great. This, like you said, first broadcast from KBW. As our audience knows, we have gone to events all over the world. They've all been fantastic. But I showed up here this morning, and the line was around the block. Yeah. It's incredible. It's already packed. It's only 11 a.m. I am really excited to see what people are going to get up to and the types of conversations we're going to have at the desk today.
You know, the lines were so big that I thought we were at Consensus.
Oh my gosh,
plug
Sam.
for our own show. But I will say that, no, this is a fantastic turnout already. You said it's already in the morning here in Korea. I'm interested in learning, while we're here, what makes Korea such a vibrant crypto market. I know we're going to have a lot of great conversations today. If I'm not mistaken, Jen, you lived in Korea for a little while.
I did live in Korea. When I lived in Korea, I think crypto was just in its early days. I was just a young whippersnapper. If I think back to that time, I remember coming here and thinking about how technologically forward this country was. I didn't know what to expect when I landed here. I had just finished university. I came to teach English. And I was telling you earlier, I was shocked I could get a phone plan with unlimited data. And if I think back to what that means now, it was like really thinking about the end user. I couldn't get that in Canada. Even if I had $1 million, I asked them for unlimited. I didn't have $1 million.
For $1 million.
But I asked for unlimited data, and they looked at me like I was crazy. And I think it showed just how willing the country is to be progressive and to advance technology to serve that end user, despite, you know, what is beneficial for the large technological companies, which of course are here as well.
Yes. Well, you know, Jen, we are here live on CoinDesk.com. We are live on Twitter. We are live, X. We are live on YouTube. We are on LinkedIn. We are bringing this to as many people as possible. We really want them to see the power of what is being built in Korea. We've heard there's about 24,000 people who have registered for this event. We're hoping to meet some of them and just hear from some of the best names. Who are you looking forward to in our conversation?
Well, I was just going to say, Sam, I think there's a similarity between the two of us in that you really are embedded and really love and are focused on the culture side of crypto. And for a long time, I really loved talking about Web3 gaming. And that conversation has been kind of muted in the United States as we look at the progression with regulation and institutions. Even at Consensus, like you're saying, at Consensus Hong Kong, very institutionally focused. I think we're going to have a different conversation here. I think it's going to be really fun, and that's what I'm excited about.
Well, as we've been seeing generally, there is so much interest in stablecoins, in digital asset treasuries. I think the investor side has been really fascinating. People are pouring money into different ways to make money with crypto. You know, the token prices right now are still down over the last couple of days. I think people are worried about the government shutdown in the US. But I do think here we're going to see a passion and an excitement. People are going to be really interested, I think, in what are the use cases that are also native to the region. And that's something I'm looking forward to as we go around the world. As you said, we get to hear narratives we don't hear as much when we're at North American conferences. But, you know, we were here in Hong Kong in the beginning of the year. I'm very excited to sort of close the year here in Korea. And I don't know about you, but I think that I always come out very inspired from these events.
I come out very inspired. And speaking of use cases, I think we should get to our next guest. Our next guest is a familiar face, a former CoinDesker and the editor-in-chief of Use Case Magazine, Zach Seward. Zach, love having you here with us.
I love seeing you. Sam, I love seeing you too. I swear I was just watching you stream from Brazil like 5 minutes ago. I don't know how you're here. How'd you do it?
We figured out teleportation.
You got the teleportation?
Yeah, we really have figured that out. If you want to come back to CoinDesk, we might let you in on the secret.
Oh, okay. Well, dude, we should talk. That's fascinating stuff.
I don't know. I mean, you've created this incredible career around the programming of events like this. You've been able to contribute to the conversation all around the world in a little bit of a different way than we have. Talk to us about what's going here at KBW. It's the third one you've attended.
For sure. So, I'm happy to work with the FactBlock team to stand up the agenda for KBW. And again, it's an extension of the editorial work that you know me from Consensus and CoinDesk. Really kind of create interesting stories on stage, right? And KBW, I think, has become really one of those premier conferences in Asia, certainly, but even in the world. We're talking about, again, 24,000 attendees this year, rapid growth year over year. And again, it's convening some really, really interesting conversations. Everything from, again, sort of the things trending trad in crypto with DATs and other institutional interest, to again some of those more on-chain use cases that we're seeing emerge in Korea and elsewhere.
Zach, this event, as you mentioned, has been growing rapidly. I would say the quality of your speakers also has been growing dramatically. There's some amazing people talking here. What kind of content are we expecting to see on the stages right now?
Yeah, there's a lot going on. So there's 4 stages across the venue. We're outside the SWE stage. A lot of great stuff going on. We have Arthur Hayes speaking right now, I believe. We just heard from Donald Trump Jr., who was joining virtually in an American Bitcoin session. So a lot of policy conversations on SWE. It's certainly of that moment in crypto land. So we're hearing from the White House. We're hearing from American Bitcoin, World Liberty Financial. And then in addition to that, some long-term, builders in the space, right? We got Charles Hoskinson from Cardano coming up a bit later. Justin Sun is doing a fireside a bit later on, as well as some also emerging use cases that we're seeing around ZK, privacy primitives, and other stuff like that. So yeah, a good lineup this year. We're pretty happy with the showing, and hopefully it's a good show.
Bridge that conversation for us, right? We're having a really Asia-focused conversation here at Korea Blockchain Week. You mentioned a lot of the folks who are pushing the narrative on regulation in the United States, a lot of kind of America-first companies speaking here. Draw that bridge. Why is it important to have those conversations over here?
Well, if you look at Korea just as a crypto market, it is sort of systemically important. There's some data that says that in terms of the largest fiat trading pairs, so whatever your fiat currency is to your crypto coin of choice, the second largest fiat trading pair is the Korean won, right behind the US dollar, right? So Korea as an important crypto market certainly is supported by the data, and certainly if you're building projects, you want to be connecting with the many users and attendees who are here to learn about that stuff. It is remarkable just to see the crowd. A lot of normal people are here just to check out some of the things that are being discussed. So it's pretty crazy. And I think as it relates to American policymakers being interested, they want to be at the table when it comes to shaping regulatory conversations here in this market because it is so important. So I think when we're going to speakers in DC and saying, hey, you should speak at this thing, and they're like, hey, why the hell would I do that? I don't have constituents in Korea. They're still sort of thinking as the policy conversation is emerging in these key global markets, how America plays nicely with whatever, regulatory regimes are emerging in Korea and other places.
Zach, I'm interested. When we were in Rio last week, so much of the conversation was about payments, remittance, cross-border, stablecoins. What are the use cases when you say the KRW is the second largest pair? Are they investing?
Yeah.
Or are they actually paying?
Yes.
What do you see
Very
happening?
active investors here, very active investors. And I think Korean liquidity is something that has been treasured by crypto projects for a long time. There's certainly a bit more appetite for risk when it comes to the Korean user, the Korean trading profile. So that's something that resonates with certain teams that are, again, pushing forward various use cases.
We're going to unpack that more at the desk with various different guests. I know you mentioned Arthur Hayes, Charles Hoskinson. They were going to join us here at the desk as well. So for everyone who's watching at home, don't go anywhere. We got a big lineup coming.
Ooh.
I want to pivot the conversation and talk about Use Case Magazine. Zach, you're not only programming conferences, but this is something that we talked a lot about on the Hash. And so my question for you is, what's the use case for Use Case Magazine?
Oh, use case for Use Case Magazine, that's a good question. It's really going deep on topics that deserve a bit more space and time. So we've enlisted a lot of really great writers, many former CoinDeskers, people from Blockworks, people from Project Glitch, all over the place who've written some long-form stuff that you rarely find in today's crypto media landscape. So we're fortunate to have space in a print publication to kind of lean back, read some features, read about the history of stablecoins and their emergence as maybe the killer use case that's going to change the financial system. A lot of cool, arcane history around Bitcoin mining in there. We have Mark Hochstein, our beloved former editor at CoinDesk, going deep on ZK tech and some of the privacy that enables as well. So I would say the use case is leaning back, digging deep into stories that should have that treatment that really haven't had that treatment before.
Do you think that the crypto audience, which is chronically online, is going to give themselves the time to sit back and actually read a print post?
I mean, that's a very open question. We hope that that's the case, right? We hope that's the case, and we know it's a bit weird, right? Why would you make a print-first publication for a terminally online audience? Our thesis is that yes, that audience is going to want to just unplug for a little bit, sit back, and maybe learn some stuff that they hadn't known previously.
Is it token? Is there a token element?
There's no token element, but there is going to be wallet functionality in every issue. So every copy is a unique wallet address that can enable some cool Web3 loyalty stuff, and we're looking to explore that so that use case does have a truly Web3 native use case. So that's something that we're in the process of rolling out. Again, you'll see some pretty cool stuff when you get the cover of this magazine in your hands in a matter of weeks.
Oh, how do we get it?
I know a guy.
Okay.
All right,
Well,
we'll be talking after
we'll
the
be
show
waiting.
about that
Yeah,
one.
we'll be waiting for that.
I'll get you one. I'll get you one.
Zach, though, you were at CoinDesk.
Yep.
You now have started use case. What's your sense of the state of crypto media in general?
Yeah, it's a great question. We're doing a kind of a crypto media session tomorrow that a few of the reporters and other media professionals are going to be talking. And you guys are welcome to drop in actually and just make it a gab fest. But I think that's the question: is crypto media dead? Right? And I think people are trying to find what the new model is for providing journalism in a space that really needs that transparency. So I don't know. I have many thoughts on this. I think use case will certainly never compete with the news gathering organizations in the space. We're talking about a twice a year publication that again features long form content. But I would really love to see how the next generation of crypto media outlets funds themselves in a sustainable fashion and get some of that public accountability reporting that I think we saw a few years ago from CoinDesk with the FTX scoop and even the Terra scoops before that, because that's the stuff that I think is really important in the space. So curious to see if media entrepreneurs can figure it out.
I also wonder, the ephemera of media and the fact that it's often wispy and it's gone so quickly. We'll put out a tweet or a thread or something like that. We'll see a ton of activity. 15 minutes later, we're on to the next story.
Yep.
The ability to sit down and really understand, to your point, I want to read something, I want to figure out why do stablecoins exist in a market like the U.S. compared to where they might have a different type of need. We can think about Paolo talking about 500 million people on Tether. Most people in the U.S. don't know why, right? But they also don't need it. And so I think the ability to sort of underpin that with there's actually a narrative and a story here, I think is wonderful. So congrats on that.
Yeah, and just, to that point, I think it's fascinating. You come to Korea, you come to Seoul, you come to Hong Kong, certainly, and you'll see just on signage on the street, right, payment accepted, and Tether is one of 3 options, right? Yeah. It's much more intertwined into the daily needs. It serves daily needs. You certainly saw that in Argentina last year when we were there for the Avalanche Summit. Certainly saw that in Brazil, I'm sure. So I think for us with the magazine, it's really structured into what are those big lasting use cases that aren't just a fly-by-night thing that you'll see on crypto Twitter and then go away in a week, right? So we go deep on Bitcoin, we go deep on stable coins, we go deep on open source development as the way that a lot of this stuff gets built in new and novel ways, and we go deep on some crypto native financial innovations like meme coins and the good and bad that comes with it. So looking forward to getting it into people's hands. It's going to be a lovely artifact. And I'm happy to extend you a couple copies.
I can't wait to get one in my hands, and I know Sam feels the same way. Zach, absolutely a pleasure to have you here at the desk.
Jen,
you're always
miss
welcome.
you, buddy.
I miss you too.
my hash friend.
I know.
Any hash fans out there?
Always a love fest.
Yeah, you know.
When we get the old hash crew together. All right, that was Use Case Magazine editor-in-chief and my former hash co-host, Zach Seward. We're going to take a quick break. We'll be right back. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Stay ahead of the markets with Seoul. Our next guest joins us now, the co-founder of BitLayer, a Layer 2 network dedicated to bringing scalability and new functionality to the Bitcoin network. BitLayer co-founder Charlie Hu joins us now. Charlie, how are you doing?
I'm doing good. Yeah, right. Nice to meet you.
Yeah. Very nice to meet you in person. I think
finally.
We've met online before. You're speaking tomorrow on the state of Bitcoin Fi. Let's lay a foundation here. When it comes to Bitcoin DeFi, where are we today and where are we heading?
Yeah, great question. So a lot of people heard about DeFi, right? From 2020, we had an amazing DeFi summer from Ethereum. Last 7 years, a lot of things happened. We have tens of billions of assets on chain. We have a lot of very interesting on-chain protocols being involved, right? From lending, DEXs to liquid staking. And we forgot one important thing, which is a very important asset called Bitcoin, right? And Bitcoin is the most winning asset the last 15 years. But due to lack of programmability, there's no real DeFi happening on the Bitcoin network, right? In the last 2 years, we had a very interesting season called Ordinals, which is kind of like a Bitcoin version of NFT, but those assets kind of being kind of the UTXO floating around on Bitcoin network with no DeFi use cases, right? So I think it's a huge value unlock. We're sitting at around like upcoming 2-3 trillion asset class. So kind of what we want to do is to bring this programmability and the bridging solution to the Bitcoin network.
You know, we've been talking about DeFi on Bitcoin for a long time,
Yeah.
you know, whether it's with Jack Mallers. I mean, there's a lot of people like yourself who are really bullish on the possibilities.
Yeah.
And I think everyone recognized that the core chain was maybe too slow
Yes.
for it. And so the idea of layer 2s really are how this scales.
Mm-hmm.
Tell us a little bit about what the challenges are technically
Absolutely.
about getting to
Yeah.
the DeFi layer.
So for people who don't know Bitcoin, right? It's around 7 transactions per second. It's designed as a proof of work kind of UTXO network. So it's a very great system for store of value, right? But a lot of people have been exploring where we can get yield, right? With the Bitcoin they're holding, from the retail miners to institution, right? A lot of people are holding Bitcoin and are constantly asking the question, where the yield come from, what we can do with the Bitcoin. And the challenge right now, as I said, is lack of programmability. There's no native on-chain yield on Bitcoin network, and you can't really do a lot of the smart contract functionality on Bitcoin. So that's kind of how our BVM bridge we want to build, to bring the Bitcoin assets liquidity to different type of ecosystem, to bring the programmability for the Bitcoin assets, right? So when we have smart contract on top of the Bitcoin assets, all the things are kind of already battle tested on Ethereum network. We can make it happen, but it's for Bitcoin, right? So Raptor, the new Raptor version of Bitcoin, we call this YBDC, is trying to serve for that role.
You know, we talk about programmability, and what we've seen in other ecosystems is once you introduce programmability, you introduce security risks,
Yes,
right?
yeah.
Bitcoin is secure; it feels safe, like more so than other ecosystems. If we introduce programmability, are we also introducing risks?
Well, that's kind of how we want to solve the problem, right? So when we compare our solution to the original, very first Bitcoin wrapping solution, WBDC, so the key difference is on the trust assumption. So for the people who heard about WBDC, right, it started in 2018. It's a wrapped version of Bitcoin with a multi-sig kind of approach, right? So the trust assumption is the multi-sig WBDC DAO needs to be majority of signers are honest at the same time. Otherwise, they have the vulnerability on the security bridging risks. So our mechanism is using Bitcoin script to build this BVM on-chain fraud-proof approach. So as long as one operator is honest, they actually able to, and also have the motivation to initiate the challenge game to make sure security is safe. When there's like malicious transactions happening, they can actually stop the bridging solution, bridging process. So we heard about all these bridging hacks, right? The multi-sig hacks recently, unfortunately, happened with like Bybit and a few others. So I think when we talk about mass adoption of Bitcoin DeFi in the future, like when institutions come into the space, we want to make sure there's like way less like trust assumption dependent, right? We don't have to rely on the majority of the signers are honest to make sure the bridge is safe. So it's a much more trust minimized kind of way to bring Bitcoin programmability to the Bitcoin assets, right? And I think Bitcoin as a layer 1 is very secure, right? We don't need to worry about that. It's more about the future of quantum proof kind of on the layer 1 part. But it's about the bridging, right? We want to build a more decentralized, more secure bridging solution in the way to bring the programmability and the yield for that.
I just want to follow up on what you just said. You know, that the quantum proof aspect is something that people are talking more and more about now.
Yeah.
What's your opinion and perspective there? Once we figure out quantum,
Yeah.
is there a big risk to Bitcoin?
Well, it's one of the long-term kind of issues. The Bitcoin Core, a lot of people we're working with, including Bitcoin miners, some of them are our like strategic partners. We've been discussing. So I think the next 3 to 5 years, it's going to be one of the interesting upgradation we need to address. But in the beginning, I think it's an important thing to figure out the Bitcoin network, where the next kind of phase, right? You know, where we can bring the yield to the Bitcoiners, where we can bring more fees to the miners to maintain the security budget. Because that will be even a bigger concern. When the miners don't have any incentives to really maintain the network, then the hash rate goes down. That's actually a bigger risk than the quantum computing. And because, you know, quantum computing is more like cryptology issues, but I think it will be a lot of the anti-quantum solutions kind of evolving. And we will have time to figure that out when the solution really comes. But the bigger problem is like when there's nothing, no transaction happening in the mempool, no real use case for Bitcoiners, and there's no yield for Bitcoin at all. people finding less and less incentive to holding Bitcoin and actually maintain the hash rate of Bitcoin network, then the security of the Bitcoin network actually gets down. Then that's actually a bigger problem.
Charlie, I have a two-part question for you. First part is, when we saw ordinals come out,
Yeah.
there were a lot of people in the Bitcoin ecosystem who didn't like the fact that now we were deviating from the core store of value, right? Now when we think of DeFi, I'm wondering, one, do we think that the core sort of store of value set of Bitcoin is going to accept it? Number two is then, when and if they do, what do you think are going to be the most attractive areas of DeFi? Is it going to be lending? Is it going to be tokenization? Is it going to be meme coins? Like, what are you excited about?
Yeah, thanks Sam for the two great questions.
Yeah.
So I think first question, I actually personally sit down, chat with Peter Todd, with like Luke, a few of the Bitcoin core. So very different opinions, right? And I think that's probably the beauty of Bitcoin ecosystem. Satoshi as a founder is disappeared, right? We kind of don't have to follow just one person's opinion. It's a very decentralized network, and Bitcoin Foundation is kind of like not really leading the way anymore. So it's a liberal market, and I would say, regardless people like it or not of ordinals, it was definitely a big catalyst for people to bring a lot of transaction, also attention, back to Bitcoin network, right? Bitcoin has been a successful assets, but not too much like as a network, right? There's multiple attempts, right? Bitcoin sidechains and Lightning, but not too much adoption. Ordinals definitely brought a lot of that, the on-chain transaction back, which miners made a lot of fees on that, right? And also Web3 wallets such as OKX really made a lot of the user base on that. So I was actually first wave of that, and I definitely think it was a very interesting catalyst to make people feel, okay, what we can do with the Bitcoin network, right? If we actually can unlock the programmability, that's a lot of value unlock. So I would say that's a very good thing to have. Obviously, some people say, okay, a lot of UTXO was kind of garbage, right? There was quite a lot of spam on the network. So that's exactly what we want to solve. Leave the Bitcoin network maintain on the key value and the store layer and liquidity layer, but a lot of the high frequent kind of transaction or use cases and programmability needs to be sit on the layer 2's ecosystem, rely on our trust minimized bridge and other kind of ways to bring the transaction on Bitcoin and around Bitcoin, right? So that's kind of how we want to solve the problem. So I think the use cases, right? If we want to talk about smart contract, based Bitcoin DeFi, the first use case which can bring a lot of adoption will be lending, right? No matter it's a retail or institution, Bitcoin lending is actually already kind of proven with demand. People want to borrow against the Bitcoin assets for stable coins or other liquidities, right? They want to fully capitalize their Bitcoin assets, right? Increase the capital efficiency. So I think Bitcoin lending is here to stay, and it's going to grow further and further with the institutional adoption, is ETF, ETP, and all the other products. And the second one, I'm very interested to explore the higher frequent kind of a Bitcoin transaction kind of protocol. Hyperliquid and all the other are very high performance kind of a protocol, right? It's very successful this cycle, but it's not on Bitcoin network. It's different security level, right? If we're able to use the Bitcoin assets, actually transaction settle on Bitcoin network, but happening on the L2 space, I think there's a lot of interesting value unlock, right? We all know Bitcoin is the most secure, censorship resistant network. If we can do DeFi on that, I think it's beautiful. So it's not just like low frequent, you interact with the chain only like once per month, but actually multiple times per day, right? That will be very valuable. Yeah.
We got to go in just a second, but really quickly, I want to ask you, what does it mean for the Ethereum ecosystem when Bitcoin DeFi takes off? And I guess the second part to the question that we got to answer really quickly is, does Ethereum have the first mover advantage here?
Ethereum on DeFi definitely have the first mover advantage, right? And I think what we are trying to do on Belayer, we actually want to bring and unlock the Bitcoin liquidity to Ethereum and all the non-EVM ecosystems, such as Sui, Solana, we're partnering with as well. So it's actually not competing. We're actually providing value on both sides, right? On one side, the assets being sitting in idle, not actually getting any yield. On the other side, a lot of DeFi protocol wants to onboard the blue chip Bitcoin assets as a TVL. So I think that's the gap we want to close. Ethereum definitely bring a lot of innovation as a first mover advantage on DeFi, right? It's going to continue. But I think when we unlock the Bitcoin assets and bring the DeFi to Bitcoin, there's a lot of new use case and innovation could happen in the upcoming months.
Charlie, thanks so much for joining us at the desk. It was a pleasure.
Pleasure.
Thank you, Charlie.
Thank you.
That was BitLayer co-founder Charlie Hu. We are going to take a quick break. We'll be right back. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, Welcome
and
back to
events on
CoinDesk
the go.
live from Korea Blockchain Week, an event that is showcasing some of the top crypto projects right here in Asia and beyond. Our next guest is the co-founder of Wintermute, a global algorithmic trading and market-making firm that is deeply integrated into every corner of the crypto ecosystem. With over a decade of high-frequency trading experience, he is a leading voice on market structure and a prolific investor in the next generation of startups. Please welcome Johan Turpin. Hello.
Good morning, Jennifer. Good morning, Sam.
Good morning.
Thanks for the kind words.
I was going to say, did you like that intro? I thought it was better than all the ones we've done so far. So.
Yeah. Maybe one more time, but
All right, Johan, you're talking later about insights on emerging coins. And we heard this morning that the retail investors in Korea have a really thriving community.
Yeah.
And we've seen a lot of folks who are just regular retail investors come to the conference, come here. Talk to us, give us a little preview about what you're going to be talking about.
So emerging coins is kind of a vague subject as well. So we were not too sure either. Like I think you can take it any direction as such. I think you can take it meme coins way. You can take it about just talking about the 84 million coins that have been issued. I think on Solana. It's quite a big universe. I think it's always about what remains as such and what stays more than 3 days essentially. In terms of the retail interest here, I think there's very positive and there's very kind of like more gloomy reasons why there's so much retail interest here. I think everyone is always just a bit in debt here, a bit struggling to get a car, struggling to get a flat, and I think for many reasons actually socially it's been make it rich and make it rich quick. Has been actually one of the very big focuses of the local population as such. So actually, and there's also a tax element to it where actually there's still no individual taxes on crypto until at least 2027, unless they push it back again. But there's quite a big reason why actually there's quite a lot of interest in memes, and the thing that people will just hope will actually go 100x essentially. I tell everyone not to use leverage. I tell everyone to just look at the market as if they were VCs essentially. So essentially, it might sound counterintuitive, but I don't really trade, and I just keep try to aim for a 10x, but then some of the x will go to zero. I think it's a better way to look at it. And in terms of other emerging coins, that we can move from like meme coins to even stable coins, and some of the new revamped stable coins that we've seen with essentially. You could just call it a hedge fund on-chain as such, essentially so new or existing hedge fund strategies that have been just democratized and essentially just wrapped into a stable coin as such.
You just said, you think people should look at the markets like as if they were VCs. For our audience that's watching at home, what does that mean?
It means whenever you invest in something, you write it off. You consider that this is not essential money for your daily, life essentially. And it means that when it actually works, because there's quite a few that actually, from a VC perspective, is 50% goes to zero, 40% goes to like 1 to 2x, and you have like 8-9% of the portfolio that will actually just bring all the returns in the fund essentially. So when it works, when you have a coin that goes, 2-3x, don't sell it straight away. Don't sell it straight away. So the perspective in this is maybe the lucky ones who are in hype more recently and $1, $2, $3, about $3 or so, and then held it to about 50 or so. The dynamics of people who are like day one in Ethereum, I think it was around under $1 essentially, and then whatever it is today, like it went down a bit last few days, but then say it's $4,200 or so. So you don't have to be necessarily like super early. There will be different cycles. There will be winners. To that extent, I think there's an index approach should really come into play. It's still not that popular. It makes a lot of sense to us, but it's still not that democratized. And I think it's just a bit of that. People still have very much the hope that they can get 100x, and an index doesn't doesn't excite them as much. So I think that's a bit of the perspective here.
Johan, I'm in a lot of chat groups. As you know, crypto's run on Telegram and Signal and WhatsApp.
Yeah.
And very often when people are talking about a new token, someone will mention, oh, well, Wintermute's in it, or Wintermute's behind it. And I think about that as, in essence, as some brand trust, that people are saying this must be more legitimate because you guys are involved. And I'm just wondering what it means to be a market maker on your side, and how do you decide what to sort of put your brand behind and liquidity behind? And then also maybe explain to our audience the difference between a crypto market maker and a traditional market maker.
Yeah. From my perspective, there's not that many differences, but it's a very multi-layered question, so I'll try to to peel the layers over time. One dimension is many times you hear in a group chat that we're market makers. We're not. It's very much a bit of like, which is a compliment to us, but it's also misguiding to others. So we tend to tell teams that don't say anything, just don't necessarily declare it as such. There's one very good validation, which is a validation of what we are aiming to do from the start. So all three co-founders, essentially the two that you know, we are essentially very much a TradFi baked as such in terms of having traded in the traditional markets as such. I was more in rates, and Yevgeny was more in ETFs. We took a lot of the good practices from traditional markets, essentially. So anything like fake volume manipulation and so on, we really, really hate, and then we make sure it doesn't happen. And then all these aspects it's just how we believe that market structure should work long term, and how to keep it healthy and scalable and reliable. So it's very much from that perspective we build a brand based on that. There's other aspects in terms of being able to deliver good liquidity for projects is very much about having reliable infrastructure. So we can show that, or we see that. It's not like we talk to competitors in the rest of the market every day, but we can see that from our market share, like especially in spot, growing from let's say 10-12% or so a few years ago, and more like 15-ish% or so. And when it moves more, when there's shocks, essentially up or down, we tend to have a higher market share, which is a testament to basically a very solid infrastructure. There's this aspect, and there's a brand aspect around the fact that if we associate our brand with the project, people assume that we've done a certain amount of due diligence, and we often do, especially in the meme space and so on, where it's sometimes difficult to see is that there's very good memes and there's the less good memes. There's very good memes that people who've been there for some time genuinely believe in building the community. So it's more of it's not a product market fit, it's more a community market fit as such. So it's a perspective of like, are people there to build a community long term? That's one aspect. And the second aspect I would say is that the work we've been able to do with some of the more Web 2 to Web 3 trading apps, essentially. So some of them we can't necessarily name publicly, but you'll know from their reports, essentially from the quarterly reports and such. And it's a testament to just us doing good work and being very competitive with pricing as well. So it's a bit of a combination of both infrastructure, pricing, and then our ethos and having the best standards in the space.
Tell me a little bit about the diligence you do on meme coins.
There's not that much you can do.
Yeah.
One, try to avoid there's not some honeypot as such, and people are not misguided per se. Two, that is hopefully not going to be a rug as such. So often, very, very simple rules are quite efficient. If people are going to rug, they tend to do it very quickly. And essentially, that we are biased because we're victims of our size, because we need something that moves the needle to be able to trade a certain coin. So typically, it happens more in smaller market caps. So we tend to wait, and sometimes we miss big projects. We start to talk to them about when they're at 20 million market cap, and this happened to me last year several times. And then we basically start to engage more commercially when they're at $500 million or 800 million or so. And then whatever, there's a lot less commercial upside for us potentially, but it's okay. Like, it's just part of the process and just making sure that there's a bit of a filtering as such. So, but ultimately, it's all about the guesstimation of like, are they still going to be there in 6-12 months? Are they generally there, building for the community? An interesting aspect of the good projects is they will be actually heavily distributed, and when we need to borrow a certain amount of tokens, we may actually need to aggregate quite a few holders to be able to get to a size that actually fits the firm as well. So it's an interesting conundrum there.
Johan, thank you so much for joining us at the desk today and sharing that insight. It was a pleasure.
Thank you, Jennifer. Thank you, Sam.
Johan.
Thank you.
That was Wintermute co-founder Johan Turpin. We are going to take a quick break. We'll be right back. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go.
You can always run, and we're doing host chat.
Hello, and welcome back to CoinDesk Live. We are coming to you from Korea Blockchain Week. I'm Jen Sanasi, here with my co-host, Sam Ewan. Sam, we are getting right into the swing of things. We've had a few guests already here. Just curious, I know this is your first time in Korea, your first time at Korea Blockchain Week. Has your perspective changed at all? Or are you starting to build a perspective that you didn't have when we started the show?
Well, we've been spending more time generally in the Asia region, both focusing on our coverage at CoinDesk, our social engagement, but also our conference. We have our event here in February. This past year will be February again, 2026 in Hong Kong. And I think I'd heard about the dynamism in the region, and I think we get to see it on the ground, right? Zach was here earlier telling us two things I thought were fascinating. 24,000 people have registered for this event, which you can feel it. I mean, this room is packed.
Around the block. Room is packed. I wish we could show you.
Super buzzy. But I think the thing that stood out for me most was the stat he told us about the Korean won, the KRW, being the second biggest trading pair against crypto.
Behind US dollar, yeah.
And, when asked what they're doing with it, it's investing, right? So there's people who are both looking for Bitcoin and Ethereum, but they're also looking for meme coins. They're looking to get into different projects. And I think that's something that's really fascinating because when we saw the energy in Hong Kong, we see the energy in Singapore, we see Korea now, we've heard about some of the sort of amazing conferences in Malaysia. I just think that this is a region that we should not be ignoring.
Yeah, I agree 100%. I think Johan, our last guest, brought up something really important. And we talk about interest in retail trading. We talk about meme coins. He said there are a lot of people, I think not just in this region, everywhere, given the state of the global economy, that are looking for that 100x. And I think there's a fine line, right? And it's conferences like this where we can get education, where we can hear from people like that, where we can learn more about the projects, I think will help people not feel like they need to 100x on the next coin and they need to put their life savings into something because state of the global economy is not, where it used to be.
I think crypto investors are sometimes a little misguided. When I think about the fact that you could have gotten to Palantir at a $7 or $8 or $10 mark, and it's at 170 now. You're feeling pretty good, and that's a great return in the stock market. We don't need 100x's all the time.
We don't, and we shouldn't aspire to it.
Steady investment thesis doesn't require it, and so therefore, I think if we can help say, hey, there's an opportunity for you to invest smartly. I think Johan said it very well. Do your due diligence and make it happen. I think there's an opportunity for people to do very well and help to build an ecosystem that's seen as less speculation and gambling than it's been in the past.
All right, we were talking to Johan about meme coins, and we were going to carry on that meme coin conversation right now and welcome in our next guest. They are co-hosting the Doge Show, celebrating the launch of Doge OS. Welcome Doge OS CEO Jordan Jefferson and actor TJ Miller. Hello.
Hello, thanks for having us.
Thanks for being here. We just got to start here. What is the Doge Show?
So it's Doge News Network. And so we hadn't really, it seems crazy, but it's perfect. So Doge News Network is going to be the Doge dog doing citizen journalism, and I'm the voice of the dog. So the dog itself really was just the face of the meme coin, and the blockchain that is sort of mimetic. And then it was really Jordan who came up with the idea, well, let's give him a voice. Let's make him a character. And that was the first time anybody had ever thought of that. And I was on Silicon Valley, which was a show that was, makes fun of this culture because it's so ridiculous. And so I said, well, I don't really want to do another show about cryptocurrency and Silicon Valley and all that. And when I really got into it is when Jordan said, actually, it's not going to be about crypto. It's going to be about real stuff. It's going to be, again, citizen journalism. And that's when I said, oh, that would be so funny. So what I did is I reached out, and the show is going to be everything that Jordan, imagined. And then the director is actually the director of Deadpool, which is a film that I was in. So, a show where I'm a dog and I voice a dog, directed by the director of Deadpool, I think it's going to be a home run. So we're really, really excited, and we are premiering sort of a sizzle reel, a teaser during our panel. And so we're excited for people to kind of see the intersection between comedy and blockchain, because Jordan has sort of taken the Doge blockchain to the next level, and I'll let him talk about that.
For sure.
Well, before we go there, TJ, I want to know, you're playing the Doge dog. How method are you getting into this? How are you embodying this character? So it's working.
I wasn't expecting that.
Neither was I.
Anything can happen on live television.
On CoinDesk.
You can get TJ Miller barking like the Doge dog. All right, Jordan, let's go on over to you. Besides the show, besides TJ barking and voicing this dog and doing some fun citizen journalism, talk to us a little bit about Doge OS and how the two come together.
For sure. I mean, Doge OS, we call it the app layer for Dogecoin. So what we're trying to do is basically build an entire Web3 ecosystem on Doge. Doge right now is a coin, it's a blockchain. There's no Web3, there's no ecosystem, there's no apps, there's no builders. So we're basically trying to take, the biggest kind of cultural movement, one of the biggest communities in all of crypto, and just deliver more fun. Our goal is basically, could all these tens of millions of Doge holders have more fun if there were Doge games, if there were Doge apps, if you could just do more with your Doge? And so, it ties together because I think what we're all doing is trying to carry the Doge meme, the Doge movement, this kind of cultural icon further. And when TJ and I met, I kind of explained to him, it's not really about promoting Dogecoin. It's about the dog. The meme came before the coin. And so doing this show is really just, furthering this beloved meme. And that's kind of a way that, maybe funnels people into crypto, maybe onboards the next, million normies into our crazy world.
We were just talking to Johan from Wintermute about meme coins and the plethora of meme coins that flood the market. Most don't last a few days before they disappear. What do you think it is about Doge and the community that has kept it going for so long?
To me, the main thing is that the word meme coin wasn't even a thing when Dogecoin was created. And before Dogecoin kind of blew up, nobody knew that you could get rich creating a meme coin. And the creators of Dogecoin also didn't know that and also didn't get rich. And so I think it was, kind of a special thing that is, impossible to repeat. And I think that gave it like a purity. The community was really pure. They believed in it because it was a meme. They thought it was funny. They didn't think, oh, I'm buying this to get rich. It's just kind of fun. And then, you carry that several years forward. Dogecoin goes crazy. It pumps. And now, we're years past the all-time high. Elon Musk going on SNL and all that. And so the people who are still around really just love it. They just kind of believe in the culture. And I think it's really hard to replicate that, 10 plus years of natural community building.
Jordan, do you think that Doge, which as a mimetic is the strongest probably outside of Bitcoin in the crypto space, but as a blockchain, maybe it hasn't innovated the way that an Ethereum has? So as the app layer that you were talking about, is part of that also about saying mimetics can have utility and we're trying to build that?
Definitely. I mean, I would say that Dogecoin, because it was kind of a joke and because it's just volunteers who maintain it, it could not innovate like an Ethereum, a Solana, whatever. It does one thing really well, fast, cheap, simple payments, kind of like a faster, cheaper Bitcoin. But I personally think that if Dogecoin had a ton of developers behind it and it had added smart contracts long ago, I think Doge would be Solana. It was, Solana took off because it was fast and cheap, and then meme culture erupted on Solana. It became the place for meme coins. I think that could have been Dogecoin. And so I'm not saying we're now trying to do that, but the idea is, yeah, there's a lot of potential here because there's just such a community.
I remember when I think it was like Mark Cuban had announced that they were going to accept Dogecoin payments in different sports arenas, and there were some brands experimenting. Do you think we're going to see a day when we're spending Doge, or is that left for stablecoins and maybe the innovation that's happening on Ether, Bitcoin?
Well, I think the thing that I got excited about was it's the intersection, to me, of comedy and operability. So it just takes it to a new level where people can develop on it, but it's still funny. And what I've been saying is it sort of started as a fake kind of blockchain, but now it's a blockchain that's fake that you can build real things on that can be fake, or they can have real utility. And I was a Bitcoiner early on, not OG, but that's how I started in this space. And Bitcoiners kind of looked at Dogecoin as, that's just a waste of time. That's ridiculous. Don't get involved in that. You're wasting your Bitcoin money if you buy any Doge. And I sort of listened and I believed that. And then I learned about Ethereum from my friend who's an ETH maxi, Brandon Plasters. And so those were the two spaces that I was in, Bitcoin and Ethereum, because that is a layer one that everything is built on. And so when Jordan came to me, it just blew my mind. Are we allowed to cuss on this program?
I think you've done it before.
Well,
on this program.
I appreciate using the word plethora, and it blew my fucking mind. I was just like, wait a second, this is so incredible, and it already has a community, and has a brand name that's really only exceeded, I think you said, by Bitcoin, and nobody knows what Ethereum is in the larger population, but everybody has heard of Doge. So we have this opportunity to bring people in and allow them to bring utility, but on a cool blockchain. I mean, we've talked about it. It's like, it's funny. It's cool. Solana is not cool. Sorry, guys. But, you know, there's really nothing to it. You're just looking at what is the utility of these blockchains. I want to build on it because the gas fees will be this. It's cheaper. It's faster. This makes sense for a meme coin. This makes sense for this dApp or that dApp. And so Doge is cool. And I think we want to build the community that is already, you know, it's pre-existing. It's already there. It's present. And there's just nothing like that. And so I'm fucking excited to get this shit going.
How are people going to consume the show? Is it YouTube? Is it going to be tokenized? Or are people going to engage with it within the Doge ecosystem itself?
So, yeah,
I think all of
are we
it.
allowed to, well, okay.
Go ahead.
Yeah, all of it. Let's say all of it. I mean, you know, we're democratizing access.
I feel like we're about to get alpha right there.
Yeah, we're democratizing access. I mean, we do have a big partnership for the, you know, debut of the show. I don't know if we're allowed to say, maybe I won't say, but you'll find out very soon, maybe.
Yeah, and you know, Jordan also started off saying, let's really understand, well, we know how people consume content now. And whether the longer episodes, because it revolves around interviewing people, and whether, you know, the longer episodes, the full episodes exist on YouTube or Tubi, which I love. I'm sorry I haven't brought that up yet. But wherever those things exist, people can go to that. But we want, like Doge, we want to present a mimetic kind of way that people will consume it. And so those are shorter clips. And I think that's a big part of what we want to do. And that's sort of my expertise, is having moments. And those moments from this show, I think, will remind people that Doge is funny. It doesn't have to be political. It's not. It really is not. And it's funny. It has a sense of humor. It's self-deprecating. It's all the things that we love about comedy, instead of being self-serious, which is a lot of what every other blockchain is focused on. So that's what we want to bring back. It's like we want to take Doge back and then have utility and let people build on it and be creative on it. And I think that's just really exciting. Nobody's doing that. And it's great. Like, if we can bring more comedy and a sense of humor back into this space, that's just great.
One of my favorite things about crypto conferences is that you're probably almost always going to see at least one Shiba Inu walking around. And this entire conversation, I've just been thinking of like little furry creatures and dogs, and how much I hope that I see a Shiba Inu later. I know that there is a charitable element here. You're working with Korean Canine Rescue. Talk to us a little bit about that, and will there be dogs later?
There are dogs there right now. We can go. You can just leave the show and we can go pet the dogs.
Oh my gosh, people are not going to see me after the next
Right.
ad break.
So yeah, Korean Canine Rescue, really cool organization we found locally. I mean, it's in the name. They rescue dogs. They try to rehome them. We just thought, okay, everyone loves Shiba Inus. You know, this is Doge. Could we do something to help dogs and do it here and make it fun? So we have 5 or 6 adorable dogs downstairs. We've donated a bunch of money. People can donate money, but more importantly, people can also adopt these dogs. I think it would be really cool if, you know, they were all adopted by the end of this conference. So
Can I travel with an adopted dog? We'll have to figure that
Talk
out.
to the
Absolutely can.
authorities about
We
that
could
one,
talk.
yeah.
We could talk to.
If we don't see you for a little
Border
while
Patrol.
and you're petting the dogs, when you come back, you'll have a bigger smile on your face.
I know.
So that's another thing is we want people to just enjoy blockchain, enjoy kind of building applications that have utility and operability. And we want to remind people that a big part of Doge, as you just said, is community, but also, you know, doing good things. It's, you know, it's important.
You know, TJ, on my flight over here, I did watch Ready Player One.
Yeah, it's such a great movie, right?
Great-
It's the
great
only
movie.
movie I've been in that I watched. I finished the film and then I watched it again. And Steven Spielberg was so just quietly humble about it. And then, of course, it came out and it was so fun. What did you think of it?
I loved it. It's my second watching. But I thought about your character, IROC, and towards the end, loses all of his
Everything.
coins after 10 years of gathering. You said you were an early Bitcoin holder. Do you still hold?
Yeah, I mean, I am a hodler. I believe in the Ethereum blockchain and I believe in what you can build on it. But neither of those things are funny, you know? So the Bitcoin community is self-serious, and the maxis, which my wife is a maximalist, and so sometimes that's a grinding of gears, but I think this was such an opportunity to move into a place where I can do what I do best. I speak at Bitcoin conferences about adoption and cultural adoption, but I'm a comedian. You know, that's really what I do. And so I never had the opportunity to create something that was so indelibly tied to something like the Doge blockchain. So yes, but I think, you know, you don't have to, we're not asking people to just flock to Doge. We're just saying, what if you could use it as something that people could create with? And I think that's really exciting. And, you know, with Doge News Network, my whole focus is getting people to laugh again, getting people to get the joke, and getting people to adopt dogs. So yeah, I think you can exist in more than one space or more than one ecosystem, but the space as a whole is missing something. And I think Jordan realized that. And instead of just focusing on the comedy of Dogecoin, now it's real, which I think is what's so funny. That also is funny that you would ever take the Doge blockchain and do what Jordan is doing. And so I'm really excited about that. It's sort of, I hate the term, but it's meta comedy.
All right, TJ Jordan, we got to wrap up, but I will tell you.
You just want to go pet dogs.
I was going to say, I will tell you, this thing ends at 1 p.m. local time, and if a dog shows up here for the outro, I wouldn't be mad, and he would get to be on TV. So if you can make that happen, I would love that.
Yeah, I'm going to tell you,
All
I'm
right.
getting the thumbs up from Deer and Win over here. So
All right.
I think we can make
We'll
that
see
happen.
dog later. Okay, that was Doge OS CEO Jordan Jefferson and actor TJ Miller. We are going to be right back after a quick break with Arthur Hayes. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Welcome back to CoinDesk Live from Korea Blockchain Week. I'm Jen Sanasi. That's Sam Ewan, and we've been bringing the conversation in Asia right to you at your home, wherever you are sitting. Sam, it sounds like we are going to get a dog on our program a little bit later.
It appears we might have a K9 with us at the end of the show. I don't believe you're going to be allowed to take it on the plane.
Yeah, I don't think so.
You might have to stay here, Jen.
Dreams crushed at Korea Blockchain Week. But it just really, I mean, the event is crushing it. You know, Sam, you mentioned before, it is crowded down here. There are several stages, one right behind us. We've seen several influential figures walk backstage to do some of their talks, and we are going to get to one of those figures right now. Chief Investment Officer at Maelstrom and the co-founder of BitMEX, Arthur Hayes, joins us. Hello.
Hi.
Nice to see you IRL.
Yeah.
Yeah. All right, we got to talk about this excitement. You just brought a lot of energy to the desk. We're here at Korea Blockchain Week. I mean, talk to us about what you hope the audience who's watching this learns about Asia and crypto.
I mean, this is the most active crypto trading market in the world by any country, even per capita, right? It's crazy. So, and it has been that way for a very long time, which is why I've been coming to Korea for crypto since 2014. So I love this place. I love Seoul. I live in the region. I've been here many, many times.
We've talked a little bit about it, but I would love to hear it from your perspective. You've been coming to Korea since 2014. Talk to us about the trading culture here, the retail trading culture here. What is it that makes it such a dynamic market for crypto trading?
So, number one thing is a very highly educated market. Number two, which is actually not the best statistic, is that they're overeducated in terms of there's not as much opportunity for all these very intelligent people. It's extremely expensive to live in Seoul and be successful, and all of the best jobs are controlled by 4, 5, 6, 7 families who run these chaebols, the Samsungs, Hyundais of the world, LG. And so you have this population that wants to escape this depressing, crushing rat race that is like Korean society in this megapolis. And so crypto and the internet have been one of those things, whether it's been gaming, and now it's stock trading, right? So, I used to come from TradFi, and back in the day, Kospi options were the most liquid market in the world. The city of 20 million people trades more options than anyone else in the world, until the regulators essentially just banned it because, they have days off of the market when Korean university students have exams. That's how much of the retail is into trading to sort of get a leg up in their life, because it's just so hard to succeed in this society where there's not that much opportunity given all these very, very smart and educated people. And so when crypto comes along, where it's a flat ecosystem, anyone can build anything, and if you're smart and ambitious, you can become a Do Kwon. Obviously, he's probably not the best person to say that, or SY from Story, right? These leading figures in crypto have done so well, and there's so much activity, and if people believe that they study more, if they're smarter, they can crack the code of the markets, and in this 24/7 market, they can trade their way out of being in a basement like in Parasite, right?
Yeah.
So,
Arthur, I want to switch gears a little bit. I know you just got off stage. I believe you were predicting Trump was going to take control of the Fed in the first half of 2026. I'm just interested in your take right now of what's happening on the U.S. side of crypto.
I mean, at the end of the day, it's about making sure that the right people in TradFi make enough money on this Bitcoin crypto boom, this bubble that they're going to blow by pumping up the credit, right? So they want to make sure that people are paying their taxes, they're buying their real estate, they're going to the club, they're going to the restaurants. The investment bankers are making 5% doing DAT deals. The lawyers are charging $2,000 an hour to make opinions. Like everybody's making money in crypto because it's this bull market, and it's going to help sort of revitalize the government finances. So that, I think, is why Trump wants crypto to do well.
And so what does that mean? I mean, what are you predicting? First half of 2026, that happens. Where does Bitcoin go?
I mean, I still believe that Bitcoin could be 250,000 by the end of the year, and my North Star is 2028, end of 2028, when Trump and his cronies leave office, that, in their wake, Bitcoin could be in the $1 million plus range because of all the money that they've printed between now and the end of their term.
We're at the end of September. The end of the year is coming really soon, and we're not close to 250,000. What has to happen?
Come on, guys.
Arthur, I couldn't help but ask you about yesterday's conversation on Twitter about hype.
Yeah.
Hyperliquid. You and Maelstrom got out of your position. You talked about all of these token unlocks being really deflationary on the opportunities for, I guess, retail. Can you just break down your thesis about this?
So number one, I got on stage in Tokyo and I wrote a very good essay about stable coins and how hype has the potential to go 126x. Now the key point here is by 2028. We are in 2025 right now, and a lot of things can happen between now and then. And as a chief investment officer of a fucking hedge fund, I go long and I go short, even though I might have a conviction on a long-term state of play. And so right now in the short term, we have an issue where Hyperliquid is facing its Chinification moment, where they're going to have competitors who've seen a successful business model, and they're going to say, okay, great, now I'm going to take your price down to zero and see how you survive, right? And so we have Lighter, zero-fee trading and some sort of airdrop. We have Aster, maybe or maybe not. It's backed by CZ. I have no fucking idea. And they're doing low or no-fee trading. And so when you have Hyperliquid, I think they charge something like 3.5 or 4 basis points, whatever it is. And they have this massive potential sell pressure coming starting in November. We don't know how many of the developers are going to sell, if at all. But if I'm going to think about the model, I'm going to say, well, okay, do I believe that Hype has the moat in terms of revenues to make enough money so that they buy back enough Hype tokens where this doesn't matter? And before, this weekend when I pulled up the DeFi Llama leaderboard and I saw that Lighter was number 2 and Aster number 3, both doing, $2, $3, $4 billion ADV days, and Hype was only about 4.5 billion. I'm like, okay, well, this isn't good. I need Hype to make money. Because when Hype makes money, then they buy Hype, and then I don't care about the unlock. But if there are these people that are going to say, I'm going to go and pull we only care, we'll make it up in volume in the back end. I'm going to go zero-fee trading, see if I can get all your users, Vampire Squid attack you, do an airdrop so that people can do another 10, 20x on their airdrop. Then I'm worried that Hype might not have enough money to buy back enough tokens to offset this potential negative drag on the very publicly known unlock schedule. And I said, okay, cool, I'm going to exit. If Hype goes from 50 to 100 and I'm wrong, great. I still think it's going to 5,000 in 2 years. If Hype goes from 50 to 25, and I'm right, great. Now I get to buy back at 25, and I get some extra use in my returns. And so that's why I'm thinking as a fund manager in terms of the probabilistic outcome and what's my best expected value decision, and that's why we sold.
When you're thinking as a fund manager, and I want to just get your perspective on digital asset treasuries. I mean, there are digital asset treasuries being built around Hype, but around so many other tokens. When you're thinking as a fund manager, how much is this digital asset narrative coming into your evaluations of assets?
I obviously am an advisor of UPXI. We have done a Maelstrom. I've done a few pipes. We've also traded a few in the secondary market. And it's a very tough market because obviously if you buy into the pipe, it takes you about 3 months to get your shares. It's very public when the unlock happens. And, this talk might pump, whatever it does, and then it's going to come back down to reality because everyone recognizes that the pipe investors are going to sell their shares, which we did as soon as we got them. And so it's a momentum-based strategy that's very beta to crypto. So, but as a fund manager, okay, if I believe that Bitcoin and ETH are going up, and the market's going up, what's the fastest horse I can ride and I can get off the easiest? Like these DAT deals, yes, they can pump real quick, but for whatever reason, if the sentiment changes while I'm asleep in New York overnight, this shit can be down 75%, like knock on some of these other deals. And all of a sudden, all this money that I saw on paper is evaporated while I'm sleeping. So I don't like trading these things because that's just not the type of thing that I want to trade. It's a hot potato. There's a structural reason why they exist. There'll be, a few winners, a few micro-strategies in each different token category. I hope UPXI is one of them. But at the end of the day, from a trading perspective, they're very difficult to trade. It takes a different type of mentality and a different type of frequency trader. That's not me or any of the other traders or fund managers at Maelstrom. And so we tend not to get too involved in putting a lot of money in these DAT deals on the secondary market. We've done a few pipes. If we make 10, 20% on our money in a few months, okay, that's fair. But again, I'm not overly enthusiastic because of the way our fund is set up and to trade these things.
All right, we got to wrap it there, Arthur, but I got to end at this. A little birdie told me that you like to spend your Februaries on the ski hills in Japan, but that's also when Consensus is. So wondering if you might give up skiing for Consensus next year.
Highly unlikely.
Okay, well, I had to try.
We're going to keep asking.
Arthur, thank you so much for joining us. It was a pleasure.
Thanks for having me.
Thanks, Heather.
That was Maelstrom CIO Arthur Hayes. We are going to take a quick break, and we'll be right back. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Hello, you are watching CoinDesk Live from Korea Blockchain Week. Our next guest joins us at the desk now. She's the head of APAC Policy and Strategic Partnerships for TRM Labs, a leading blockchain intelligence firm. As a former top regulator at the Monetary Authority of Singapore, I can't speak today. She has a unique insider's perspective on the jurisdictional jockeying happening across the regions. Please welcome Angela Ang. Hello.
Hi, Jen. Hi, Sam. Thank
Hello,
you
Angela.
so much for having me here today. Such a pleasure.
Of course. Thank you so much for being here. We've been having a lot of fun at the desk. As you can tell, I'm just stumbling over my words because I can't get them out fast enough. Let's talk about your panel title. It was in my intro, APAC's Jurisdictional Jockeying. Talk to us about what that means and why that's such an important conversation to be having here at KBW.
Well, I think it's very exciting, not just the topic of the panel, but who's on the panel. So I will be moderating senior regulators from the Securities Commission Malaysia, SEC Thailand, as well as Angelina Kwan, formerly of the Securities and Futures Commission in Hong Kong. So an all-ladies panel to talk about regulatory developments across Asia. And I think here what we really want to highlight is the diversity in terms of approaches and the fact that actually the first movers in crypto regulation were here in Asia.
And I mean, Angela, to your point, the first movers were here. The most noise gets made by the US or Europe, but I don't think we recognize the fact that a lot of the groundwork was done in this part of the world. What do you think makes Asia want to sort of figure out the rails first? And sort of, is it about protecting people or is it about creating business opportunities?
So I think the thing about regulation is that you've got to be proportionate, right? And usually the amount of attention that policymakers and regulators give to a particular asset class is commensurate to its size, adoption, and therefore the risk to the things like monetary stability as well as consumers. And so in Asia, I think we saw a lot of early crypto developments out of Japan, which therefore was one of the first in the world to experience a crypto hack on an exchange. And that, I think, kind of drove regulatory attention towards creating a framework to say that, hey, we need to be able to regulate this industry. And in order to do that effectively, we need to understand it. And I think many other regulators in the region picked up from that. So Thailand had its regulatory framework in 2018, Malaysia in 2019, Singapore in 2020, just as a few examples.
You know, we've been talking about different jurisdictions, Singapore, Korea, Thailand, like you just mentioned, for builders here who are accessible to folks from all of these different countries in the APAC region. How do you advise them to navigate this kind of fragmented, I guess, regulatory ecosystem?
Well, I think that's a very astute observation, Jen, because sometimes people talk about Asia, like crypto regulation in Asia, Asia's crypto ecosystem, as if it is monolithic. But really, we are talking about the crypto ecosystem in Singapore, Hong Kong, Japan, Korea, Thailand, Malaysia, and they're all different. They all have their own distinct players, their own distinct frameworks, and I think the main thing. And that I would share with anyone that's hoping to build a crypto business in Asia is don't be afraid of talking to regulators. The regulators in Asia, I think, have a posture of openness, a consultative approach to policy making, and many times, and I'm speaking from my own personal experience working at the MAS. I think regulators are very much focused on getting it right. And they realize, especially in a space like crypto, where everything is developing so fast, there's no way you can understand the tech while sitting in an ivory tower. So, they're open to talking to industry, and saying, this is my intention. Does this actually work in terms of implementing it in your business? And those are very important conversations for builders and businesses to have.
Angela, I'm interested that a lot of project builders think very much about their security layer, they think very much about their UI, they think about their liquidity. I don't know if they are thinking at their regulatory approach from the beginning when they're just starting out. But I believe that they have to be thinking about how does this scale? And the only way that we get scale is jurisdictionally. So are there ways that you advise people to think about building a regulatory approach into project development?
Yeah, I think that landscape is changing. And just to highlight one thing in common that regulators and builders have is that they are both thinking very much about the security layer. The regulators and the builders are just as worried about hacks. So we do have some common ground there. Yeah. But in terms of compliance, I think we have an opportunity now where the maturity of the industry and the regulatory frameworks give you the opportunity to think about something we call compliance by design. How can you program some of these requirements, some of these controls into the very project that you're building from day zero? Right, and we talk about compliance, programmatic compliance. We work with DeFi protocols to basically leverage our data and via APIs to automatically, for example, block off sanctioned entities. So even when you're operating a project, a protocol programmatically, there's still opportunity to do compliance and in fact do it effectively and do it by design.
We got to go in just about a minute, but I have to ask you this. We're here in South Korea, and North Korea has been a major threat to the crypto ecosystem. Some of the major hacks that we've seen have been a result of North Korean hackers. Talk to me a little bit about anti-money laundering and countering financing terrorism here. I know TRM Labs has done a lot of work on that front.
Yeah, I think like many regulators around the world, AML CFT is top of mind for regulators here in Korea when it comes to crypto businesses. Why? Because crypto facilitates the movement of value. And not just that, but at the speed of the internet. So it is something that regulators take very seriously, and we do see a convergence, for example, around financial action task force standards, around what regulators around globally are expecting. And I think that this is an opportunity really on two fronts. One is that I think more and more players are thinking about, I do want to do better. Like, I acknowledge that there have been many incidents in industry that have shaken the trust, trust of users, trust of the broader financial services sector. And I want to rebuild that. And so one of the ways is to show that I'm robustly regulated. I care about these things. And so, having robust and clear regulatory frameworks in place gives you something to level up to. So I think there's a huge opportunity there for businesses.
Angela, thanks so much for joining us at the desk. It was a pleasure.
Thank you so much for having me.
Thank you, Angela.
Thank you.
That was the head of APAC policy and strategic partnerships at TRM Labs, Angela Ang. We are going to take a quick break, and when we come back, Charles Hoskinson joins us. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Hello and welcome back to CoinDesk Live. We are coming to you from Seoul, South Korea, where Korea Blockchain Week is underway. Our next guest is known for co-founding Ethereum and for creating Cardano with a distinct research-driven philosophy. He continues to be the voice in policy discussions, recently participating in the U.S. Senate Roundtable on crypto market structure. Input-Output founder and CEO Charles Hoskinson. Hello again.
It's great to be here in Korea.
It's great to see you. I mean, Sam and I have been spending time with you all over the world.
Love
so it's great to see you here.
It's an ongoing conversation.
It really is. We just carry on the conversation one plane ride away, and we just pick up where we left off. And this is where I want to pick up where we left off. I saw some interesting photos of you on the internet, and you told me you just came back from Mongolia. So just talk to us about what you were doing before you got here.
So we're doing an Asia tour, and it's 5 countries, so Mongolia, Korea, Vietnam, Singapore, and Japan. So Mongolia was the fun part of the trip. So I went out and lived as a nomad for a few days, and I was in Western Mongolia with the Kazakh eagle hunters, and we were up on horseback with these golden eagles, and we'd throw them, and they'd go and catch foxes and marmots and other things and bring it back. It hailed on us. We slept in gares. We demolished a lot of vodka. It was a very good trip.
Feels different since when we saw you in Las Vegas last time.
Yeah. What stays in Kazakh Mongolia, stays there.
How do you decide what adventure you're going on next? I mean, from like fire ants to eagle hunting in Mongolia, so I don't even know what's next. Like, tell me about that process.
Well, I just think of the most painful, worst experience I can, and I just do that, and it prepares me for crypto Twitter. We're good to go.
Charles, I got to ask, you're known so much for Ethereum, for Cardano. A lot of your focus has been on input-output recently.
Yeah.
Tell us a little bit about what you're building with input-output and the importance of the Asia region to it.
Yeah. So input-output, it's the company I started to build Cardano. It kind of started as a project-oriented company. So it had a beginning, a middle, and an end, and the goal was to build Cardano and get it out. But once we'd done that, we said we have the world's largest research group for cryptocurrencies, 168 scientists, and 250 papers. We have all these engineers. We have all these capabilities. And we're really good at building ecosystems. We have all the marketing for it. We have the branding. We have all the Twitter people and these things. So we said it'd be really cool to set up a venture studio and start building on ecosystems. And our flagship product for that is Midnight. And that's launching later this year. And Midnight's already in the distribution, but it's 8 different ecosystems, 7 different blockchains. And we've had a lovely time working with everybody. And we've kind of gone from this mystical island that nobody goes to actually being a broader member of the larger cryptocurrency ecosystem. But Korea in particular is a phenomenal marketplace. I've watched it grow throughout my whole career because I used to live in Hong Kong and I lived in Japan. And so Korea was always that neighbor to the west that you would say, hey, how are those markets? And now there's 16 million people that hold cryptocurrencies here. It's a meaningful percentage of the population, about 35%. $77 billion in assets are held, crypto assets are held here in Korea. It's almost 100 billion won. And they have a very comprehensive regulatory structure. It started with the SFTIA and it was about 2020, and then they passed a follow-up, the VAUPA, which was in 2024, and now they're getting the DABA done, but they have basically an end-to-end comprehensive market structure, which means the Choboi will work their way in, so the Samsungs and the LGs and the SKs, and you're going to see a broad-scale all-of-government, all-of-culture adoption. And what's really unique about Korea is the herd mentality. Usually we have institutional investors, and then you'll have your retail investors. In Korea, most of it's just retail investors, and they just swarm. They call it ant investors. They swarm, and so they have this ability to influence and manipulate things. And It's just incredible to watch. Like the number one traded asset a few years ago was Ethereum Classic. It's the only place in the world where that was traded, like at this scale on the Korean exchanges. So it's a very different market. It's a very different place, and it's a lot of fun to be here at Korea Blockchain. We could just see how it's grown so much.
Charles, I'm curious to hear from you, and maybe I'm misguided in this question a little bit. When we hear about the Asia Pacific region in news headlines, we often hear about Hong Kong, we hear about Singapore. And given the stats you just laid out, I would think that we would hear about Korea more. Why do you think we don't?
Well, the problem with Korea is that the regulatory structure is for Koreans by Koreans. And so when you look at capital controls and the compliance requirements, like to buy crypto here, you have to link your bank account and your real life human identity to it. So it's very stringent, it's very strict, it's very closed. And that's why the Kinchi premium exists, where there's usually a higher price Koreans pay for cryptocurrencies over their Western counterparts. So it's a difficult market for non-Koreans to get into. It's very similar to India. It's a very difficult market to enter if you're not Indian. And so they've historically had some friction there. But there's been some alliances like this new Kaya blockchain that Lion is producing. Really looks like it's gonna be a big actor in all of Asia with 250 million users. And so this market's opening up, and there's going to be some sort of linkage point, and they'll probably create a greater Asia cooperation between the JFSA and the Singapore Monetary Authority when they do DABA. The other thing is Korea always looked to the United States, and they didn't want to be super pro-crypto, but the people of Korea want to be pro-crypto. So they're trying to figure out how to reconcile that. But now that the U.S. is opening up, Korea is going to be probably more aggressive inside the cryptocurrency market. And the only way they can grow is now horizontally. So they have to grow with their neighbors. So they have to link up with Indochina, China, Japan, and other places.
That's what I was wondering is, you participate in the Senate roundtable discussions on market structure. When you see a market like crypto and what it's done, a market like Korea and what it's done, do you think there's things that we in the West can learn, or is it vice versa? They're really taking our cue from what's happening in the U.S.?
Well, the United States is badly behind. The disastrous Biden administration, it was horrible. And it basically killed all innovation and regulatory progress in the U.S. for about 4 years. And the rest of the world moved on. And so they passed laws, we didn't. And a big part of Clarity and Genius was just getting parity with MiCA and what VAU here did, VAUPA, or what the ADGM did in Abu Dhabi, or what Switzerland's been doing. So we'll be able to catch up. But once we catch up, the other side of it is that people want access to the U.S. capital markets. And they look to us to decide how RWAs are going to work. That's the tsunami wave. There's about $10 trillion in real-world assets that exist that could be tokenized, but we can't quite do it because we don't quite have the understanding of how to make securities work in the blockchain space. How does the disclosure work? How does broker-dealer work? How does custody work? How do all these things with KYC and AML work on cross-border settlements? And so we're sorting that out. Once the U.S. sorts that out, we'll create one unified securities market across the entire world, and that's going to probably lead the majority of growth in the cryptocurrency space over the next 5 years. So the United States is in a singular position of power there because we control the world markets from that dimension. But for the rest of the cryptocurrency stuff, the layer 1 stuff, the layer 2 stuff, the GameFi stuff, the NFT stuff, Asia has really been a dominant force in guiding those markets, growing those markets. And when you look at a lot of Asian countries, whether it be Korea or Vietnam, you have at least a quarter of the population, in some cases more than 30%, that have bought cryptocurrencies and used cryptocurrencies. Now, what's really interesting, though, is even though you have a third of the country that's doing crypto, here in Korea in particular, about 66% of the population has less than $500 of crypto. So 66% of the holders of crypto. So you have a very broad but thin holdership. So when these regulations come in, what ends up happening is you go from a broad instead of thin to thick. And so a mass wealth transfer basically enters into the cryptocurrency markets. So the U.S. is going to have a very big role in that because it's going to institutionalize kind of the global standards. It'll get FATF off people's backs and the IMF off people's backs. And then we'll end up seeing the markets grow to 10 trillion and beyond, probably within the next 5 years because of it.
I'm curious to hear your perspective on this. I mean, you've spent a lot of time in Asia and you've watched the markets in different Asian countries for a long time. Culturally here, are the countries competitive with each other? I mean, you mentioned that eventually you're going to have to start working together and make connections, but is there almost a competition that might prevent them from working together from a regulatory standpoint?
Well, yeah, but power structures, everybody is afraid of somebody. So, like when I went to Vietnam the first time, I stepped out of the airport and I see a Popeye's chicken and I see like a Domino's pizza. I said, I thought we lost this war. What happened? And the thing is, the Vietnamese, they understand the Chinese are a much bigger threat to their way of life, culture, and economy than the United States ever was. So they have to be friends with the U.S. and the U.S. economy if they want to actually counterbalance to China. And so really, this region is all about, are you with China or are you with the West? That's what's happening. So if you're with China, you start getting deeply integrated into Belt and Road, and there's kind of a large alliance that they have with the BRICS there. Look, I was just in Mongolia, and the biggest economic development in the last 20 years in Mongolia is a pipeline that Russia's building through Mongolia, and Mongolia will make $1 billion a year in transit fees from that pipeline, because the Russians lost access to the European market, so now they're building pipelines into China to gain access to that market. So that's like the Belt and Road China thing. When you look at Korea, obviously they're U.S. camp. Same for Japan and Vietnam and others. And so they have every economic incentive to cooperate. And so that means, everything from the visa level, having tourist visas and make it very easy to go, easy to have businesses do business with each other, get rid of capital controls, a lot more trade, a lot more manufacturing agreements, a lot more export agreements, especially free trade that pushes its way through. And then crypto is going to get caught into that broader macro sense. And they also have a common set of problems. Crypto is intrinsically global, so when fraud occurs, you need reciprocal agreements for people to be able to prosecute fraud. Because like if somebody from Vietnam comes to Korea and defrauds somebody, for example, how did the Korean police coordinate with the Vietnamese police or vice versa to be able to sort that out? So they have strong incentives to work together. The big challenge is they didn't want to anger the United States, because China's already become very clear. It's like crypto only works the way we want it to work. If you're outside of that, it's illegal. So there's no deviation from that. Whereas the United States is now pro-crypto, so they say, oh, okay, we're allowed to actually start these agreements. It used to be they would do it, but they'd kind of do it on the side and not talk very broadly about it, even though they're passing laws and the markets are growing. They still would hide it from the legacy banking institutions and hide it from FATF and hide it from the IMF, and they'd always just try to make it small and local. But now they can actually say, hey, look at us, we're big, we're part of this market, and actually go for U.S. consumers and European consumers.
Charles, one last question. Let's just keep it tight, but I can't let you go without talking about Midnight. Midnight has been one of the largest allocations to date across, as you mentioned, 8 different projects, 7 different blockchains. I'm interested, when we talk about this global market, how are we going to protect privacy as more and more people are coming on chain and more and more people are coming on chain to do things like everyday transactions?
Well, the biggest issue in the blockchain space right now is how do you bridge the gap between the TradFi world and the DeFi world? They're fundamentally incompatible with each other. So TradFi it has nation-state borders, you have AML and KYC, you have real-life human identity, you have strong privacy mandates like GDPR or HIPAA or Bank Secrecy Act or other things. Like everything is tightly regulated in the world of medicine and finance and all these other traditional industries that we have. And the DeFi world, everything's open source, everything's open, there's no borders, it trades 24 hours a day, 7 days a week, and it's typically public. So you need some sort of middleman that's a cryptocurrency in nature, but it has the ability to provide computational privacy and selective disclosure. So for about 6 years, we worked on Midnight, and we were trying to figure out like the everything chain, layer 2 to everybody. And basically the idea is that you do a broad distribution to many ecosystems, Ethereum and Solana and Cardano and Bitcoin, and then you create a programming layer that gives people an easy language to write private smart contracts, and they can define the disclosure regime, and they can define the privacy characteristics of the business logic that they have. So if you're trading, for example, real-world assets, you say, okay, I'm going to do AML KYC, and these are the people I'm going to disclose to, but it's going to settle on a blockchain and be totally private to everybody else. So it looks like Zcash or Monero from the outside, but there's selective disclosure to, let's say, the government of the United States or whatever for that particular asset. But it's at the application level, not at the ledger level, so that means that you can program it any way you want. So you can cover the Zcash use case as just disclosure to you, or you can cover a regulated use case like travel rule compliance or other things. And then it opens up this amazing world of supply chains and medical data and all kinds of stuff. So it's been a lot of fun watching it grow and just how fast the partners have come at us. And almost every partner has the same story. They say like, oh, we tried blockchain for a few years. We did a pilot. and it didn't work because we couldn't get the privacy part of it to work, and it centralized the whole thing. And so it's really nice to be out of that. And it's been fun to work with everybody. It's like you do an airdrop to all these ecosystems, suddenly people in Solana want to talk to us, which is just weird, and Avalanche and Ethereum and all these other things. So it's been fun to talk to a lot of old friends and actually have something economic to offer and partnerships there. And it's been fun to learn Solidity again and all these other languages like Solang and just play with them and be able to grow with those ecosystems.
Charles, thanks so much for joining us at the desk, and I'm sure we'll see you around the conference.
Oh, of course. Thank you so much.
Thank you, Charles.
That was Input Output founder and CEO Charles Hoskinson. We are going to take a quick break. We'll be right back. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the
It's going
go.
to be on you, though. All right, welcome back to CoinDesk. We are here with our next guest, Wrecked Guy NFT founder, general gentleman in the Web3 space, artist in the NFT ecosystem, but also CEO of Wrecked Brands, Ovi Farouk, OSF. Ovi, great to see you again.
Thanks for having me. It's probably the nicest intro I've ever had, so I appreciate that.
Has anyone ever introduced you as a general gentleman?
No, it's the first time I've heard that, so I really do appreciate that.
What I love about Ovi, and I've gotten to know him over the years, is here's someone I believe was a trader at Barclays, so really understands the financial ecosystem, then decides to become an artist, right? Who goes in that arc? His art happens to do very well under the handle OSF. And then you start to say, what can I do with this? In addition to you and one of your partners, Mando, amassing a fortune in Bored Apes and other NFTs, which they very publicly sold, you were always very focused on this sort of character world you had built. But it was one of the things where you never thought it was going to stop just there. That there's always more things, you being a creative mind, were bringing to it. And so now we have Wrecked Drinks. But tell us a little bit about how you went from Wrecked the character, if you will, to Wrecked Guy, to the drinks. And I just want to commend 1 million cans of this drink sold so far, which is quite an achievement.
Yeah, appreciate that. We hit the 1 million target last week, which is nice. Yeah, look, Wrecked Guy was a product of maybe a midlife crisis. I just created this random character and really genuinely had no plans for it. It was a free mint. We gave the whole thing away for free. Had no roadmap for it. And I think we just launched it in 2022, so right when everything crashed and people could suddenly relate to or resonate with Wrecked Guy as a character or the concept of getting wrecked. And over the next 2 years, we just built a very strong community and following, and it made me realize, wow, this idea on concept of being wrecked, everyone kind of gets it, right? Not only in crypto, but in your professional life, your personal life. So it felt like there was an opportunity there to do something with it. And the idea was like, okay, it feels cool as a brand. How do we get this brand and the logo in as many places as possible? And with drinks, they're cheap to manufacture. You can mass produce them. We'll have a bunch of, in Korea here at KBW. And they serve as a very, unique Trojan horse for brand recognition, brand visibility. So I have zero experience in CPG or drinks or anything of that kind. But, we thought we'd just shoot our shot and see what happens. And, 2 years later, we're sitting here having sold 1 million drinks. So it's definitely been quite the journey for sure.
I guess when you were working on Wall Street, you didn't think that you'd be shilling sparkling water.
It's funny because there's a sort of like a troll reporter out there in the finance world, and she wrote an article about me, which was like, I think it was called From Wall Street to Selling $60 Drinks. Sort of like, I guess downplaying the achievements a little bit, but yeah, not on my bingo card for sure.
I feel like someone from Wall Street is the only person who could sell $60 drinks.
but Ovi, you know, I believe you've already built some Web3 mechanics into the drinks themselves. You know, and we're going to talk later with Luca. I think there's a couple of people, you're one of them, who sort of said there's going to be a few brands that are going to hit consumers out of the last 5 years of Web3. Pudgy Penguins is one of them. Rect feels to be another one. Why are you guys just better at this compared to, I think, some of the others who, you know, I wore my yellow Adidas tracksuit the other day that we got as a reward from the Adidas NFTs with Bored Apes, Crypto Punks, or whatever, Punk Comics. And I remember thinking, if anyone was going to get it right, it was Adidas.
Yeah.
And then they didn't. But you have. And so tell us sort of what did you learn from the community that allowed you to succeed?
Yeah, I think one thing I would say is it's not that easy for legacy and traditional brands to do well in crypto. Crypto is very cult-like, right? It's almost like an us versus them mentality. So people love crypto-native projects and they want to get behind it. You know, Pudgy Penguins, for example, this is the face of crypto. This is like crypto-native IP. If Pudgy Penguins wins, crypto wins. That's the narrative I think people within crypto like. And I think there have been too many like external people coming into crypto viewing it as like, oh, look at all these, you know, dumb kids spending money on meme coins and stuff. Let's go in there and make some money. And that's generally what those guys try and do. So when you're crypto native, I think you have people on your side. So that's definitely a big thing. And for us, you know, like this, we've had a community that was kind of born by accident, I would say, but we had no intention to create it that way. So it was very organic from the beginning. And we only now have a token, but we waited 4 years before launching that. And so like Rect is not the first ever consume to earn product. Like there's so many of them out there and most of them have failed. But when you launch out of the gates as consume to earn, you have a token there, the people you're going to get involved at the beginning are just going to be like, cool, let me, you know, flip this token, get my money and move on. Whereas if you spend 4 years building and creating a community where people feel like they represent something or stand for something, and then you have the token, people are like, well, this is already part of my personality and part of my life. I also want to hold this token, I'm not just here to sell it. And I think that's the key difference for us versus other consume to earn projects.
I want to build on that a little bit because it's not only Web2 brands who aren't able to make it in the space that you and Luca have been able to make it in. It's a lot of crypto native companies that have tried to make NFTs happen, that have tried to transition from digital collectibles to physical ones. And you both have done it really well, right? And I know you just said you spent 4 years building that community. Do you think that some of the projects who haven't made it kind of try to fast track that community aspect, or they don't pay enough attention to the community?
I think so, yeah. I mean, our whole foundation or principle has been based on rewarding our community, but also like not extracting from it, if that makes sense. Like Rect Guy was a free mint, didn't take anything for it. We then gifted equity in Rect Brands Inc. to our NFT holders. I think we're certainly the only NFT project that's ever done that, and possibly the only crypto project that's ever done that. And that was done compliantly in the US. And then everyone got like a Rect coin airdrop, which is worth a decent amount. So all these guys, there are people out there who literally spent $0 and suddenly have made thousands of dollars. What's the strongest form of loyalty? If you make someone money, maybe the strongest form is if you save someone's life, but this is a close second. And that, I think, is one of the reasons why people are just so diehard about this, because they're like, I've just made money from nothing. These guys never tried to charge me for anything, never tried to, sell more NFTs, like sell more of this. And it's only now we're starting to sell drinks, but guess what? You can actually drink the drinks. So it's not like they're going to complete in total waste. So again, like, I'd love to tell you these are all things that I'd crafted and spent a lot of time thinking about, but it was really just throwing random darts and hoping they land, basically.
Sometimes you get lucky. All right. Yeah. That was CEO of Rect Brands, Ovi Farouk. Ovi, thanks for coming by.
Thanks so much for having me.
See you again.
Cheers.
And we're going to take a quick break. We'll be right back.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters. want market moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go.
Welcome back to our live programming from Korea Blockchain Week. We have been having a ton of fun right here at the desk, and the fun continues. Our next guest has a vision for a more equitable AI future and is bringing that vision to life with Gaia. Gaia co-founder and CEO Matt Wright joins us now. Hey, Matt.
Hey, how's it going? Thanks for having me.
Thank you for being here. Like I said, we've been having a lot of fun at the desk, and we haven't had a chance to talk about AI yet. So let's talk about this. A more equitable future for AI seems like a future that feels a little bit intangible right now, given everything that's happening. What does that look like to you?
Yeah, so what we're doing is we're helping folks take open source large language models, take their own data, vectorize it, and turn it into inference. So they can host their own models for their own businesses, monetize that, and essentially become an AI provider, quite simply.
So break it down. If I have a coffee shop and I'm the best at selling coffee, I can in essence train my model so that someone else could then in essence license that or work on my blueprint, and I can be the answer
Exactly, yeah. So right now, like, we have a few options. You can either go and use a closed source model like an OpenAI, Grok, Claude. A lot of folks are using, and they're taking that data and they're doing things with it we're not quite sure of. They're perhaps creating business models that don't enable for folks to provide compute data models in a way that's composable. And so if you're this coffee shop and you want to perhaps not be consumed by big AI, you could perhaps serve this to your customer. And what's interesting is that with smaller large language models, or like small LLMs in the crypto world, you can actually take that model and have a fine-tuned context-specific response that is actually quite accurate. And we've done some research where if you take one of these models and you train on specific context, that does show you do have much better specific performance. So the coffee shop could have very detailed answers for those prompts.
I want to take a step back a second and talk about the founding story because it's interesting and I think it will help pose the problem for our audience that's watching at home. Your team was inspired after watching a Berkeley professor nearly lose ownership of his own research. Just talk to us a little bit about that and the challenge that spells out, not only for professors at Berkeley, but anyone who has any kind of IP, whether that's a social post or something on a larger level.
Yeah, I think, look, the big thing here is I think people should be a little worried. When you look at the world of AI today, the behemoths at play are mocking the fact that you can't prove that they took your IP, you can't prove that they're liable in any way, shape, or form. The Berkeley professor that we worked with, he had 10, 20 years of his own academic research, papers, curriculum, that he did not want to put in a larger model. We did not want to see that inference turn into something that was monetized on some other kind of platform. This is his data, his IP. We've seen this with creators. Like if you played around with ChatGPT's really cool like Studio Ghibli application, super cool. However, these folks are very transparent about how they feel about it. They literally on stage will say, prove that we use the IP. And this is really sad for perhaps IP owners like a Studio Ghibli, who's a small shop in Japan, who can't really defend the legal bills of the OpenAI's kind of infrastructure. And so anyone that owns IP, whether you're a creator, you're an academic, you're a small business, you're a community, you're an NGO, you're perhaps a small government agency, you need to have more governance of this infrastructure, and you need to have a way to monetize it in a way that doesn't include some sort of middleman who can perhaps rug you or do what they want with your data.
So I think there's a lot of people watching who agree that decentralization blockchains are the way to do this. So one, I think if you can talk a little bit about what that infra layer looks like with Gaia, and two, how do you go up against an OpenAI who's also going to say, oh, these guys proved out that something's valuable, let's go make it ourselves.
Yeah. So there's a few ways to slice this, but I think the immediate thing here is I don't believe there's an internet with one or the other. I think we're always going to have big models, you're going to have smaller models trained on specific context, you're going to have agents, we're going to have this agentic internet where the largest consumers in the future will not be humans, they will be agents. And we're already seeing a huge trend toward that direction. But what we notice is, at least for Gaia's infrastructure, why we need a blockchain is if you enable anyone to become an AI provider, how do you know that they're a trusted provider? How do you know that they are providing inference in a way that your application can use or it does what it says it's going to do? And so you need blockchains for trustware or verifiable trust. We've done really great economics with proof of stake, enabled for a lot of this to be applicable on different layers. So, to keep it simple, what we're doing is taking the security risk of a blockchain and tying that to the components of AI. At least for us, AI inference. So that's models, compute, data, and then trust is kind of this last kind of piece of the puzzle that we're offering. But again, we see a world where there's going to be AI used in different shapes and forms, not just big models versus small models, but agentic workflows, single-purpose LLMs or workflows, and then you're even going to have stuff running on edge. You're going to have stuff running on your own devices. You might have a model that doesn't leave your computer, but it talks to a lot of open models or agents, and you can set the privacy to your standards. And so, what we're doing at Gaia is we see this massive demand economy, bump up on the internet, and we want to be providing inference. We want to help people become that provider. And we want to help support the network that becomes possible.
You've just really painted a picture of this internet that has AI as a foundation, right? How soon do you think we get there at the pace that AI is accelerating today?
Yeah, so some key metrics I think to consider. Right now, there's various research out there where the cost of inference is becoming 10x less in value every year. We're seeing halving of that cost every 4 months. And so if that is, Murphy's Law, we see like an infinite scale of the efficiency of AI, or at least the cost. We can also look at open source models. Right now there was 2 million models, but last August it was 400,000. In terms of agents, like I don't think we're at a point right now where agents outnumber humans quite yet on Earth, passing 7 billion, but I think we'll hit that in the next between 2027 and 2030 range. It's just extremely easy to deploy your own agent. A Gaia node is technically an agent, and you can deploy it in 5 minutes. So it's not crazy to think that agents can then go and create other agents and kind of get to that number. And so, I see that future coming rather soon. But what we're banking on is that the metrics I mentioned earlier in terms of performance and cost, if we are entering that kind of parabolic curve, it's just going to be extremely easy for anybody and everybody to own their own large language model, their own agentic workflows. And that's kind of the future we're banking on. And we think that, the consumers of the internet at that capacity are going to be more sovereign. They're going to want to have more custody of their data. They don't want that going to some one megalord AI provider. And we're just very excited.
Matt, thanks so much for joining us at the desk today.
Thanks, Matt.
Thank you so much.
Yeah.
All right, that was Gaia co-founder and CEO Matt Wright. We are going to take a quick break, and we'll be right back.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go.
Welcome back to CoinDesk Live. We are coming to you from Korea Blockchain Week in Seoul. Our next guest is at the forefront of building institutional-grade infrastructure for the Korean digital asset market. His company is pioneering custody solutions and has just launched a groundbreaking stablecoin in partnership with one of the nation's largest banks. He is the co-founder and chief strategy officer of BDAX. Please welcome Terry Kim. Terry, wonderful to see you again.
Thanks for having me. Wonderful to be here.
Thanks, Terry.
All right.
We have not yet had an institutional conversation at this desk, and it is one that we have a lot in the United States. And so let's just start there. Talk to us about what the institutional landscape looks like in Korea and what institutions are asking for.
Well, Korea has been a phenomenal market for cryptocurrency, but over the last 10 years, really retail driven. Institutions really didn't have an opportunity to come and participate with retail on any of the centralized exchanges. Now, under this administration, with this new legislation that's going to be most likely passed this year, doors are going to be open for institutions. And so now they're looking at different options, different capabilities that they can find in Korea. And for the first time, I think institutional focused products and services is something that's gaining a lot of traction.
Terry, I'm interested, in the States, we have seen so much interest on the institutional side, especially with ETFs, et cetera, that you almost can't avoid it. Here, what have the institutions been wanting when they come into the Korean market? They look at the opportunities here.
Well, first, it's regulated custody. The only infrastructure available so far were centralized exchanges. And if you want institutions who are managing client funds to start deploying their assets, they have to have a regulated custodian. That, I think, is the foundation, and that's why we're getting a lot of inquiries about how we as custodians can support institutions on their own business strategies. Under this administration, one of the campaign promises that this president has ran on was the introduction of Bitcoin ETFs. And so we are hearing a lot of security firms, a lot of asset managers, a lot of banks asking about how they can implement or execute a Bitcoin or other spot ETFs in Korea for the first time.
It's interesting you say, under a new administration, there's going to be new crypto legislation that will inform regulation, and it is encouraging institutions to look at Korea as a new market. It sounds oddly familiar to what we experience over in the United States, where Sam and I work every day. From where you sit, do you look at what's happening in the United States and foresee a future in Korea that looks similar when it comes to the institutional adoption?
Absolutely. U.S., it is the largest cryptocurrency market, and so regulation that comes out of the U.S. is something definitely that our regulators and our lawmakers are looking to benchmark. The fact that the Genius Act came out a couple of months ago is definitely informing our legislators to start creating a stablecoin framework. A lot of stablecoin-based issuers are starting to look at Korea as an important market, and I think this is all because of the lead that U.S. has really trailblazed in terms of regulatory clarity around stablecoins.
And as you mentioned stablecoins, I know you guys are involved in the KRW1 stablecoin with Worry Bank. Tell us, we heard this morning, actually, one of the first speakers mentioned that next to the USD, the Korean won is the most common trading pair going into crypto. Clearly a tremendous retail market here. What do you think a won-based stablecoin does for Korea?
So a lot of the conversation around Korean won-denominated stablecoins right now is really focused on who is going to be the issuer. Is it going to be the banks, or is it going to be the consortium of banks? Is it only going to be non-banks? That, I think, still remains to be seen. But we wanted to really kind of set the policy direction and show the regulators and the legislators and also the market that crypto-based digital asset companies, custodians like ourselves, have the full capabilities and the regulatory insight to be able to issue a stablecoin that meets all the regulatory, not just current regulatory requirements, but upcoming regulatory requirements. And so I think the biggest discussion that we're going to be having over the next 2 to 3 weeks is who is going to be that issuer. And the fact that we're working with Worry Bank positions us very strongly as a model framework for stablecoins to be issued in Korea.
Can you tell us a little bit about the engagement that you've had with folks who are looking at regulation here on the back of this proof of concept?
Yes. So as I mentioned, it was really about who can be the right issuer. And also there was a lingering question, given the state of the Korean digital asset industry, as to whether a VASP licensed entity such as ourselves, or is it some joint venture that has to be with a bank who would then have the capability to issue a stablecoin. But now that we've actually demonstrated our capability to issue a stablecoin, the conversation I think has moved beyond can we do it to how are we going to use a KRW stablecoin? Because is it only going to be listed as a trading pair on Korean exchanges, or is it going to find broader use cases like remittances and day-to-day payments?
What do you think?
I think to enable a broad adoption of stablecoin, it has to move beyond its use as a settlement layer on centralized exchanges. Remittances is a low-hanging fruit. As you can imagine, a lot of tourism activity in Korea, of tourists coming into Korea, but also Koreans, going out and exploring the world. And so, a stablecoin medium that facilitates those types of activities is something that is going to find a lot of adoption.
You could have used that when you couldn't get cash yesterday.
I had a lot of trouble getting cash out, and I thought about this exact thing. But it does make me wonder, we just came from Rio de Janeiro. We were at another event.
Right.
And stablecoins, hot topic there, but really because people are utilizing them for, to your point, a lot of payments, a lot of remittances, a lot of peer-to-peer transactions, a lot of solving a problem where the financial rails may not be as sophisticated as they are for us in the U.S. How much do you think small businesses and the average person on the street here wants to be able to at least accept a digital currency like that?
I think that's going to take a little bit of time. Korea is one of the leading financial industries in the world. Our payment infrastructure is very well made. And so you can even use your phone to buy something that is as little as 25 cents. To be able to convince them that a stablecoin is a disruptive medium, I think is going to take some time. What I think is going to receive more open adoption is B2B. Wholesale, remittances, supply chain management. I think that there's going to be significant efficiencies there that first receives adoption and it's going to trickle down into retail.
All right, we have just about a minute left. I got to ask you, you're based here in Korea. This is your 4th Korea Blockchain Week. What do you hope the world learns about Korea when it comes to crypto innovation from this conference?
So far, Korea, I think, has been off limits. There's been a lot of incidents that happened over the recent years that didn't really make it into an attractive market. But now that there's regulatory clarity, institutions are coming in, businesses are looking at leveraging digital assets in this space. And so if there's any time to start looking at Korea and to strategize and execute business strategies in Korea, I think the timing should be now.
I just want to ask in the last 20 seconds, you also are involved with Vietnam, which is another market that we were hearing a lot about. It's starting to sort of catch fire. Tell us why that's an interesting market for you.
Vietnam, much like Korea, is setting the rails and the regulation around digital assets. And they now have a pilot program that allows for digital asset companies to start offering products and services in this area. And we have a partner with IDGX Capital. And just today, we're going to be making an announcement that we're going to be creating a JV to provide digital asset custody services for the first time in Vietnam.
Well, congratulations on that announcement.
Yeah.
Hopefully we'll see you at Consensus Hong Kong and we can talk about the developments that have happened between now and then. Thanks for joining us.
Thank you for having me.
Thank you, Terry.
All right.
That was the co-founder and chief strategy officer of BDEX. We are going to take a quick break. When we come back, we talk about Solana.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters. Stay ahead of the markets with... Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. The Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters. market moving insights at your fingertips. Download the CoinDesk app for news, prices, videos, and events on the go.
Gonna go here.
Hello and welcome back to CoinDesk Live, coming to you from Korea Blockchain Week. We're nearing the end of our programming, and I told you in the middle that we might have a special guest join us, and that special guest is here now, Gary, the Shiba Inu. Let's take a look. Gary.
Say hi, Gary.
Say hi, Gary.
It's his first time on camera. He's a little shy.
Gary is a little shy. Gary is a rescue pup here in Korea, and it's not a crypto conference, Sam, if we don't have a Shiba Inu.
It's true. Wait.
So,
and Jordan, did you say that these dogs are available for adoption, or is Gary a mascot of Doge OS?
Well, today he is our honorary chief Shiba officer, but no, Gary is up for adoption. So what they do at Korean Canine Rescue is rescue dogs here in Korea and try to find loving homes for them in the US. And I think I've heard a number of people today say that they're definitely taking Gary home with them.
No way.
No. Including you just now. And then I looked at my friend over there who's also said the same. So I think we've probably found a number of new homes today for these dogs.
Can we fractionalize ownership of Gary?
He might become famous. Maybe there's an NFT collection coming in his future. We'll see if he likes the spotlight.
All right. I think Gary is getting a little anxious being with us. He's just so excited about all the love that he's feeling from everyone who wants to take him home, and the Doge community that I'm sure is very excited to see him. So thank you so much for bringing Gary back. It was a pleasure having you back to wrap the show.
Thank you guys so much. And Korean Canine Rescue, adopt adorable dogs.
You heard it here, Korean Canine Rescue. You can adopt adorable dogs. If you're in Korea, check them out. The dogs go back to the United States. So if you're like me and you want a dog and you live in the United States, you can get one. For all of you watching at home, thank you for sticking with us. This is CoinDesk Live. We came to you live from Korea Blockchain Week today. We will be doing it again all over tomorrow, starting at 10 a.m. local time. For Sam Ewan, I'm Jen Sanasi. We'll see you tomorrow.